6,268 properties sitting on the market in Auckland right now. That's not normal. That's the highest inventory level Barfoot and Thompson, Auckland's largest real estate agency, has recorded in 15 years. But here's what makes this particularly concerning. These aren't just houses that need selling. We're talking about 541 brand new apartments that were built in the last 3 years and have never found a buyer. Thousands of townhouses across West Auckland, South Auckland, and the outer suburbs sitting empty for 6 months or longer. And developers who've completely given up on selling, they're converting unsold units into rentals just to avoid total losses. If you own property in Auckland, or you're thinking about buying, or you're wondering why the market feels completely frozen right now, you need to understand exactly what's happening here. Because this isn't just about unsold inventory. This is about a fundamental shift in how Auckland's property market functions. See, back in March 2025, Barfoot and Thompson had 6,268 properties on their books. That's 1 in 3 Auckland sales. By December, that number had only dropped to 5,332, still massively elevated compared to historical norms. And here's the kicker. CBRE data from just 2 days ago shows that 20% of all apartments built in Auckland over the last 3 years remain completely unsold. Now, some of these properties are sitting vacant because developers went insolvent before anyone could take possession. Take the Loxley building in Takapuna, 46 brand new apartments, fully finished, never lived in, now being sold by mortgagee sale. Or look at Seascape Tower in Auckland's CBD, a $300 million development that stalled mid-construction with 55 units still unsold. But most of this inventory represents a different problem. Construction costs exploded. What used to cost developers around $3,500 per square meter to build now costs $5,000 to $6,000. Buyers look at asking prices and walk away. Developers look at build costs and can barely break even. And that gap between what buyers can afford and what it costs to build is exactly where thousands of Auckland properties got stuck. So over the next 12 minutes, we're breaking down exactly what's happening with Auckland's unsold property crisis. Which areas are being hit hardest? And what this means for property values, first home buyers, and the broader market as we head into 2026. Right, so before we dive into the numbers, let me tell you where this information comes from. Everything you're about to hear is sourced from Barfoot and Thompson's official market reports, CBRE's apartment market analysis released January 2026, verified reporting from the New Zealand Herald and stuff, and data from CoreLogic and ReInz. These are facts, not speculation. Here's what we're covering today. First, we'll look at exactly what the 6,000 plus unsold properties actually represent. Apartments, townhouses, and houses, and where they're concentrated. Then we'll break down why construction costs and market dynamics have created this inventory glut. And finally, we'll talk about what this means for property owners, buyers, and where Auckland's market is heading next. Let's get into it. So here's the situation. Barfoot and Thompson, which handles roughly 1 in 3 Auckland property sales, recorded 6,268 properties on their books in March 2025. That's the highest inventory level they've seen in 15 years. By December 2025, that figure had dropped slightly to 5,332, but that's still massively elevated compared to normal market conditions. Now, to understand why this matters, you need to know what normal looks like. In a balanced Auckland market, Barfoot typically carries around 3,000 to 3,500 active listings. When inventory climbs above 5,000, it signals serious oversupply, more properties than there are active buyers to purchase them. And we've been sitting above that threshold for months. But let's break down what these 6,000 plus properties actually are, because this isn't just one type of housing. According to CBRE's January 2026 apartment market analysis, 541 completed apartments built in the last 3 years remain unsold. That's 20% of the 2,572 units completed during that period. 1 in 5 brand new apartments couldn't find a buyer. And it's not just apartments. The New Zealand Herald confirmed that thousands of townhouses are sitting unsold across Auckland's outer suburbs, areas like Westgate, Massey, Pukekohe, Manurewa, and Papakura. Developers are sitting on entire subdivisions of townhouses that they can't sell at the prices they need to recover costs. In some cases, developers have completely abandoned the idea of selling. They're converting unsold units into rental properties just to generate some cash flow while they wait for market conditions to improve. But that strategy only works if you can afford to hold the property long term. And many developers can't. Now here's where it gets really interesting. The apartment pipeline has completely collapsed. Back in 2021, there were 183 apartment projects either under construction or in the planning stages across Auckland. By the first quarter of 2025, that number had dropped to just 54 projects. That's a 70% decline in the development pipeline. And the unsold apartment pipeline, projects under construction or planned for sale, sat at just 787 units in Q2 2025. That's the lowest it's been in a decade. Usually, Auckland would have around 2,000 units in the pipeline. So on one hand, you've got 541 completed apartments sitting unsold. On the other, new construction has dried up because developers know they can't sell what they build. Let me give you some specific examples, because these aren't just statistics. These are real buildings sitting empty or being sold off at massive losses. The Loxley Apartments in Takapuna, 46 units, completely finished, never lived in. The developer went insolvent before anyone could take possession. Now the entire building is being sold by mortgagee sale. Brand new apartments that were supposed to be someone's home are now distressed assets being liquidated by the bank. Then there's Wetu in Point Chevalier, 77 units that the developer couldn't sell. Instead of continuing to market them and take losses, they converted the entire development into rental apartments. That's 77 properties that were supposed to add to Auckland's housing stock as owner-occupied homes, now sitting in the rental pool indefinitely. And look at Seascape Tower in Auckland's CBD. This was supposed to be a landmark development. 65 levels, over $300 million in construction costs. The project stalled in August 2024 with 55 units still unsold. As of early 2026, there's talk of restarting construction, but the developer needs to clear that unsold inventory first. Otherwise, they're building into a market that's already rejected their product. These aren't isolated cases. CBRE's data shows this pattern repeating across Auckland. Developers finish projects, list units for sale, and watch as months turn into years with no buyers. Some cut prices and take losses, others hold and hope. But all of them are stuck in the same trap. Construction costs rose too fast, and buyer affordability didn't keep pace. Right, so let's talk about why Auckland has ended up with 6,000 plus unsold properties. And the answer comes down to three converging forces. Force number one, construction costs exploded. According to industry data, what used to cost developers around $3,500 per square meter to build now costs between $5,000 and $6,000 per square meter. That's roughly a 70% increase in build costs in just a few years. Materials, labor, council fees, compliance costs, everything went up simultaneously. So a developer who started planning a project in 2020 based on $3,500 per square meter build costs is now facing $5,000 plus per square meter reality. They have to pass those costs on to buyers, which means asking prices that feel completely disconnected from what the market will bear. Force number two, buyer affordability collapsed. While construction costs were climbing, buyer purchasing power was getting hammered. The RBNZ raised the official cash rate from 0.25% in early 2021 to 5.5% by mid-2023. Mortgage rates followed. What used to be a 2.5% fixed rate became a 6% or higher fixed rate. That meant buyers who could afford an $800,000 property in 2021 could now only afford a $600,000 property with the same income. Even though construction costs meant that $800,000 property now needed to sell for $900,000 just for the developer to break even. The gap between what buyers can afford and what developers need to charge became unbridgeable. Force number three, the pipeline collapse. When developers realized they couldn't sell what they were building, they stopped building. New project launches plummeted. The 183 apartment projects in 2021 collapsed to 54 by early 2025. Building consent data from your research files shows Auckland consents are down, even though the city still needs thousands of new homes to meet population growth. So you get this bizarre situation. Auckland faces a long-term housing shortage. Westpac Economics projects the city needs 125,000 additional homes over 5 years just to keep up with population growth. But in the short term, thousands of newly built properties sit unsold because the economics don't work for anyone involved. Alright, so what does all this actually mean if you're an Auckland property owner, a potential buyer, or an investor watching this market? First, understand that this inventory overhang puts downward pressure on prices. When you've got 6,000 plus properties competing for buyers, sellers have no pricing power. Your research files show Auckland's median house price is down 20 to 22% from the January 2022 peak, sitting at $990,000 as of mid-2025. That decline is directly linked to this supply-demand imbalance, and it's not evenly distributed. The areas with the most unsold inventory, outer suburbs with lots of new townhouse developments, CBD fringe areas with apartment oversupply, those areas are seeing the steepest price declines and the longest days on market. Properties in established suburbs with limited new construction are holding value better, but they're not immune. Second, if you're a first home buyer, this is actually creating opportunities that didn't exist during the boom years. Developers are negotiating. Some are offering incentives, covering legal fees, throwing in chattels, even helping with deposits. Mortgagee sales like the Loxley building mean you can buy brand new apartments at discounts. But here's the trade-off. You're buying into a market where prices are still falling, or at best flat. The RBNZ forecasts only 3.8% capital gain in 2026. So if you're buying for quick capital appreciation, you're likely to be disappointed. If you're buying because you need somewhere to live and the monthly cost is manageable, then this inventory glut works in your favor. Third, for investors, the calculation has completely changed. Rental yields look more attractive because purchase prices have softened while rents have held relatively steady. Your research files show Auckland rents averaging $631 per week. But capital growth is uncertain, and you're competing with developers who've converted unsold stock into rentals, adding supply to the rental market. And look, some of these unsold properties will eventually clear. Prices will adjust, buyers will emerge, developers will cut their losses. But it's going to take time. The market needs to absorb 6,000 plus properties, while construction costs remain elevated and buyer affordability remains constrained. That's not a quick process. Let me bring this all together. Auckland is sitting on 6,000 plus unsold properties, the highest inventory level Barfoot and Thompson has seen in 15 years. This includes 541 completed apartments built in the last 3 years that couldn't find buyers, thousands of unsold townhouses across outer suburbs, and a collapsed development pipeline that's dropped 70% since 2021. Because the construction cost exploded by 70%, buyer affordability collapsed as interest rates surged, and the gap between build costs and what buyers can pay became unbridgeable. Developers are stuck holding inventory, converting to rentals, or facing mortgagee sales. If you found this breakdown valuable, hit that like button and subscribe to Kiwi Property Reports. We're tracking New Zealand's housing market with verified data and real analysis. No hype, just the facts Auckland property owners and buyers need. Drop a comment below. Are you seeing unsold properties in your area? Have you noticed developers struggling to move inventory? Your on-the-ground insights help everyone understand what's really happening. Thanks for watching. I'll see you in the next report.